Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, May 15, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We have a current and continuing melt-up operation. The SPX, the SPY are at new highs, and even today, the ES made it to new highs. There is a discrepancy or a divergence or a delta between the high or the former all-time high in the ES or the ES futures contract, E-mini futures, and the SPX or the SPY. Now, everybody made a new high. Let's talk, and this is important, let's talk about where they're going. We're going to bring in the trend line discussion. And by the way, before we do, let's make mention of something. Today, for example, was not a trader's tape. It's not an intraday day trading type of tape. It was a one-way ticket. Very little pullbacks along the way. It was a melt-up operation. We had the PPI data release yesterday and the CPI data release today. Two perfect recipe/excuses to goose the tape. But the fact that it wasn't a trader's tape doesn't mean a lot of us aren't making money, right? The Lazy Swing Trader Automagical Algo System has a ton of long trades out there. They were getting PIF today. What's PIF? PIF? Paid in full. Do we have some short trades out there? Yeah, we had two more trigger today. Why is that? Because there's waning velocity in the S&P. What does that mean? They're going to find a place to turn around and go back down for a corrective move/retracement operation, which leads me to the trend line discussion. Let's go back. Let's even go over to a monthly chart. Let's go back to the first trend line and let's recall where this is from. So we had a high from March of 2000, the year 2000, 24 years ago. If you connect the highs that occurred in 2022, January of 2022, December 21, January 22, guess what? That high connected to the March of 2000 high intersected. Let's go back to a daily chart over here where we know it was overhead resistance. They fought it for roughly about 13 or 14 days. Funny how that works. Those of you that have taken the course, Lazy E-mini Trader, will recognize that's an interesting piece of information. They finally broke out above, came back for a retest, broke below, and now they're breaking back above that line. So forget that line for now. We have another trend line. Where does this one go from? This one comes from the high in October of 2007. It was the high before the crash of the financial crisis in 2008 into 2009. And if you connect these highs or that high with the same highs in December 21, January 22, you come up with this trend line. And where does that trend line leave us? How about if it's anytime soon, like tomorrow, it's up at about 232.50, 232.60. Maybe it's up at 233. It's hard to pinpoint to the exact number, but you get the point. Anywhere up in that 232 to 233 neighborhood should be and likely will be overhead resistance. Now, when I say that, consider what we're discussing. We're not talking about a 5-minute piece of overhead resistance. While it can be, however, we're talking about a trend line that extends from 2007. Remember the last trend line, the market beat it back and forth. It found resistance before being able to get higher for about 14 trading days. That's like 3 weeks. They can spike it, they come back to it, they stay around there. It could happen like that again for several days, even a few weeks. But in the big picture of things, this should be overhead resistance. It's also a magnet type of situation. Once price begins to get close to these areas that can be and normally are magnetic, price gets drawn in. That's what's happening here. Is it likely this gets hit before the end of the week during regular way options expiration week. We don't know that it will happen, but it certainly can happen. It's not that far away. In the big scheme of things, it's 2 or 3 S&P or SPY points away. Let's just call it 20 to 30 S&P handles. No problem. What do I expect to have happen when that does occur? Well, let's look at the big picture. Let's look at the total of what we're doing here from a day trading business, swing trading business, big picture perspective. We'll have a discussion in real time tomorrow morning and or Friday if and when she's up there in the live room from an intraday perspective. But also, as you saw today, if you're in the swing trade product, the lazy swing trader automagical algo issued 2 more trade entries. These were short alerts. There will be more coming as we get into an area of importance along with, write this down, waning velocity. How long can the waning velocity last? It can last another week or so. Doesn't have to turn tomorrow, but we're at an important place and we're at an important time period with waning velocity. When price and time converge, that's what situational trading is made of. Write that down. Put it on a sticky note. Let's talk about something else. How about the bond market? How about the TLT? Once again, for the second time, meaning we had a whopper of a trade in TLT already. We traded this move up, and now they did a retracement. And what I was telling traders in the live room, and by the way, this was also a trade alert from the, lazy swing trader automagical algo system. What I was explaining to traders when this was occurring is they were going to put in a higher low. That was the play. At an important place was the perfect recipe to enter a long trade. A lot of traders in the live room enter this for a swing trade. We had the lazy swing trader enter this for a swing trade. A lot of players take options for the TLT. They're getting paid handsomely. Our average cost is 89. This was the final buy at 87.85. 2 purchases, one a little higher. The average cost is 89. It's not a tremendous move, but it is a big move for the bond market. You have to consider what this is. It's the bond market. We're not talking NVIDIA. Getting back over to inside the numbers, here's the commentary. I want to make sure we're an open book so you see the commentary, but the truth of the matter is it was a one-way ticket to new highs today, and they just kept going in a melt-up operation. So what I urge you to do is pause the video, read the tape, read the comments, go back to the tape, and double-check the work. See reactions at numbers, see numbers hold, and there wasn't even any stocks on the move this morning. It was just a dud type of day trading session. How about Uber? Where did this come from? It was a live room, real-time situation. Trader saw it on the move, put it in the chat box saying, hey, what's going on with Uber? Is there any support down there? I came up with 65.23. They spiked it by a penny or two and had a rocket ride back in the other direction. Nice trade in Uber, live room, situational, real-time trading opportunity. By the way, might as well talk about the DJI, Dow Jones Industrial Average. I don't care really much about this other than the fact that you could see here the high today is 39,935. Get out your 40,000 hats. Tomorrow, Friday, they should achieve 40,000. Came up short before when they pulled back from this area just short of 40,000. People were waiting for 40,000. They never got there. Then you forget about it. Here they are. They're going to break the high and get to 40,000, spike 40,000, whatever. Get the $40,000 hats out for the New York Stock Exchange television show. What's going on over in Camp IWM? Above all the moving averages, trend is your friend, now approaching these highs over here already. These are the highs from just several weeks ago, a couple of months ago. 210 is an important spot. Start pushing above 210, even above this breakdown candle high, which happens to be at 210.80. And that's going to start to open the door for another leg higher. There's an open gap above around 214. So above 210 by much, and they're going to start to get drawn up to 214. Write that down. Put it on a sticky note. 214. 214.31 to be exact. Put it on a sticky. What about the folks down at the transportation department? Not much of a participant today. Kind of interesting. Is this a canary-ish type of signal? Clue, hint, innuendo. They were up 18, 19 points today, but not a participant in the melt-up situation. Why is that? Wasn't yesterday an on-time situation for team transports? No new high today? Quite interesting. Lazy E-mini trader course. It's in there. Time is more important than price. Gives you something to trade against. How you doing? Weekly close will be very important by Friday afternoon. Are they going to close back above the 20-period moving average on the weekly chart, or are they going to stay below? That will be a tell going into next week. Very interested in the weekly close in team transports again. Qs, new highs up 1.5%, relative strength against the IWM and the SPY. Nothing wrong with this tape whatsoever. At new highs, where are they going? 455, 460, 457, 454.32. We don't really know. We'll have a better beat on it from an intraday perspective live tomorrow morning. But at new highs, they are just at new highs. You take that at face value. It's very difficult to guess where they may turn around and start having a correction. That's why we have to wait for a sign and or signal of a trend change at new highs or at new lows. What is that? Well, that's another module in the Lazy E-mini Trader course. What are those things? I lay them out. We learn how to use them to our advantage, and that's the way we can affect a trading opportunity if there is one at new highs. Staying on the weekly chart with the XLF, again, they're at new highs. They're approaching the highs. They're flirting with the former highs from April. That's it. Nothing more, nothing less. This was just a dipsy doodle, like all the other markets, right back up to the highs. No magic. We take it at face value. What about Smashmouth? You had the sell-off from the doji candle into the 20-period moving average. Big time breakdown candle. They blew through it like it wasn't even there. We're approaching the highs already. Will they make a new high? We don't know. It doesn't matter whether they do or they don't. That will be, whether it's a give or take, overhead resistance. And you can see on the daily chart, it's the last big time breakdown candle high in the sequence. Happens to be also the high. First time, best time. 239.14 is the high. Anywhere around there, a spike of that, 240, even a spike of 240, come up short of 239. Anywhere in there will be overhead resistance. And yes, it is also a magnetic place. The closer price gets, the more likely they are to get drawn in. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.